Hello. This week we saw the fallout from Gamestop already getting a start. We saw big earnings data and a radical shift in interest rates. So looking forward to diving into each of these areas. My name is Brandon Steele. I'm a financial advisor with Mainsail Financial Group here in Bellevue. And our goal each week is to come to you and kind of bring you the market news of the week, help you kind of weed out all the noise, and just kind of bring it to you in a quick digestible video so you can catch up on what's going on. This week is exciting. There's been so much change. This weekend ahead is exciting for me anyways. We have the Super Bowl coming up on Sunday. And for those golfers out there, we also have the Waste Management Phoenix Open. It's a little different this year for those who follow. Usually there's this huge crowd on I think the 16th hole. Obviously that's a little bit smaller here this year, but still fun to watch. And I've actually played that course, so it's cool to see. So anyway, let's kind of jump right into it. Last week we had, actually I think it was last Friday, we had personal income come out and consumer spending. Both were just slightly better than expected, so it's good to see some decent numbers there. But one of the things that I thought was really interesting is we actually saw core inflation up 0.3%, which was higher than the expectations, and something that those who follow do know that we've been watching for a long time. We feel inflation has already and will continue to kind of pick up a little bit, and so it's interesting to actually see that in the measured value of inflation, because we've been talking about it, we've all felt it, but now we're actually starting to see it in the measured version of what is considered inflation. So that was really interesting, something definitely to watch in the in the months ahead. This week, let's fast forward. On Tuesday, we had motor vehicle sales, which were about 16.6 million. It's good to see that. I mean, sales are really important. If we look at, again, jobs, income, and sales, those are kind of drivers of our economy. And so it's good to see good sales numbers continuing. We go to just yesterday on Wednesday, and it was a lot of data. The first thing is we had the ADP Employment numbers come out, and they added 174,000 jobs for the month of January. It was better than expected. The expectations were about 48,000. And, it's funny with everything going on with GameStop, which I'll come to here in a minute. We didn't hear much about it. It's just like, that is the topic of the news. That's all that seems to be talked about. I guess I understand it, but these jobs numbers are really important. And although it was good to see it better than expected, to add only 174,000 jobs is certainly not great. I think a big part of that is that now some states are starting to open up a little bit. Here in Washington, I think we have indoor dining that opened up recently, things like that. So I think we're starting to hopefully see, some jobs come back into play as well. But we also had huge tech companies report earnings. We had Google and Amazon just on Wednesday alone, and both did great. I'm sure everybody has heard Jeff Bezos is stepping down as CEO, but the earnings were still really strong, and Google's was amazing. They had a huge jump basically after their earnings report. So, it's just crazy. You still see these big tech companies with these earnings that have just been great. Now, that said, we've talked a little bit about growth versus value. The tech companies typically are looked at as growth. Value is more of like your, buying on sale, so to speak. Value is still doing pretty well, even with these tech earnings. We're still seeing a good, good momentum there with the value side of things. But it's just amazing to still see tech like just keep on keeping on. Today, we had initial jobless claims come out at about 779,000 jobs lost. Again, slightly better than expected. I heard some, people kind of sharing that it was great news. It's still, 800,000 jobs lost. What is that? Almost a full year now into COVID. So it's not good, but hopefully a little glimmer as well for more good things to come. On top of that, this week has just been, like I mentioned, the GameStop story has not stopped. This week we're starting to see a little fallout from that. We talked about it last week, and I think we all kind of knew that ride was not going to last very long. And it's great for the folks who did well, but obviously there are folks on the other side of that coin as well, who might have bought in, late last week or whatever, when the markets were really high. And, we're back down. I think the price is around 70 now today versus the 400 or so it was not too long, like less than a week ago. So it's still a story, obviously, that seems to be kind of the talk of the industry, obviously. And I understand why, but I do want to make sure to touch on other things too. In addition to all that, we've also seen interest rates. It sounds funny to say go through the roof when I say that interest rates are only at 1.14% on the 10-year Treasury, but it's been a big increase. I mean, we go back just a few months ago, we're at 0.5%. Now that jump doesn't sound like a lot, 0.6%, but it's more than double. I mean, that is a huge, percentage-wise, a huge difference. And it's happened very quickly. On top of that, the yield curve, which is like short-term interest rates compared to long-term interest rates, think 10, 30-year, type of bonds, has steepened. In other words, the short-term rates are very low still, while now we're seeing the long-term rates really pick up. So this is really important because a lot of folks have a lot of money in bond assets, and typically when interest rates rise, bond prices fall. So this is really important to watch. Especially for those who are closer to retirement or in retirement. It's important you understand what you own in that area because this stuff can have an impact on your bond holdings for sure. But the reason we're seeing that difference between the short-term and the long-term rates is because the market is obviously driving some of the long-term side of it, whereas the Fed is kind of keeping those short-term rates artificially low, basically, right? They're making sure that they're holding down there. So it's possible that that continues. It will be very interesting to see as the year kind of shakes out here. As we move into next week and really tomorrow, we have non-farm payrolls. Again, I think this is a little better measure than the ADP employment rate that came out on Wednesday. So pay attention to the non-farm payrolls tomorrow and unemployment. And then next week, we have CPI, which is kind of another inflation measure as well. Before we jump into the question of the week, really appreciate you guys joining us here. We're hosting a more in-depth webinar, really talking more about planning and the state of the union, so to speak, right now, and what to expect in the year ahead. So if you'd like to join us, especially for those who aren't familiar with us and some of the things that we help with, you can actually, I'll include the link here below. But you can follow that and get registered. It's Thursday, February 18th at 5 p.m. Or you can reach out to us directly and just let us know if you'd like to join and we can get you registered for that webinar as well. All right, as far as the question of the week, again, same thing. If you want to register or you do have a question of the week, you can reach out info@mainsailfg.com. And the question of the week this week is a good one. And I understand obviously why it's important, but the question is about what does all this GameStop and Express and all this stuff mean for Robinhood? What's that actual impact to Robinhood? I'm not going to speculate here, so I'm not going to get too in depth, but I think it is important to address and maybe give you some thoughts on it. I think what's going to happen is obviously they're going to be looked at pretty heavily from the regulators right now. For them to stop the selling side of things and only allow, the buying side and only allow sells, as you might imagine, that has a big impact on the price. But also, the Robinhood traders weren't allowed to, while others were. Some of the big money was still allowed to trade on it, and so it's certainly not fair necessarily. That on top of the impact to Robinhood as a company, it will be very interesting to see. I saw some news last week that they were tapping into credit lines. I saw some news that they got some more funding, which hopefully will help kind of stop the bleeding. But when these things happen, it has an impact on their business. And because Robinhood doesn't charge for some of these things, they have to make up for costs in other areas. And so it will be interesting to see how much this has really hurt them in the grand scheme of things and what that means looking forward. I also think that personally, I think some of the people who started this may be under some scrutiny. It's really no different. It's really kind of like colluding to raise a price, to manipulate a stock, right? Get a bunch of people to get together to raise that price. And so I'm not saying I'm on one side of the fence or the other here, but I think that there's something to be said there. I think they will pay attention to it and potentially kind of make an example of this to try and keep this from happening again. Because obviously it's kind of continuing, right? It's changing stocks time and time again. So I don't have the inside information around that. I'm not certainly, in the know around that, but that's just some of the surface level stuff that I'm watching, and I thought it might be helpful to share. So I hope that is helpful. Again, outside of all the Robinhood craziness, it's interesting to watch the big tech earnings, this huge story about interest rates. Pay attention to that. And then again, tomorrow we have non-farm payrolls. So in the meantime, have a good weekend. Enjoy the Super Bowl. I'll be enjoying that and some golf. And we will see you next Thursday, same place at 3 p.m. And have a good weekend.